Hey everyone, Joey here. Got a quick video for you guys today about taxes. Yay! Who doesn't like taxes? In 2019, I paid 25% of my income to the government in taxes. 25%. You can also think about it this way. Because most people work a full-time job where taxes are taken out of their paycheck before they even get the paycheck, for the first 25% of the year, which is the first 3 months, you are working to pay the US government. So think about how much time and energy you spend on a daily basis, a weekly basis, a monthly basis, and multiply that by 3, because the first 3 months that you're working, that money is going directly to the US government. As a small business owner, I owed 16 grand in taxes in 2019. Oh man, that was painful. And I keep hearing that the super rich, the extremely wealthy, the top 1% pay less in taxes than everybody else, and I wanted to figure out why that is. Is that legal? Is it fair? How is this happening? We're gonna talk about this briefly, but before we get started, don't forget to hit the like button for the YouTube algorithm. It really helps my channel and it helps other people learn a little bit more about how taxes work. You can also subscribe to my channel for some more finance and Hawaii adventure content. Thank you for showing your support for my channel by hitting that like button. Let's get started. After reading a couple of Robert Kiyosaki's books, I learned why the super wealthy love debt when it comes to real estate. Depending on your tax bracket, you can expect to pay 10 to 37% of your income that goes directly to paying taxes. So in my case, paying 25% is right in the middle of the tax rates, between 10% and 37%. So to keep it simple, let's just use 25% for our example. Here's the deal, guys. A bunch of extremely wealthy people spend their money on real estate because it's an appreciating asset. So what these investors do is save up for a down payment for an investment mortgage loan to buy a property, and then they rent out that property to create an income for themselves, but also to have tenants pay off their mortgage for them. Think about it. With an investment mortgage loan, it doesn't really matter what the interest rate on the mortgage loan is because the tenants are covering the mortgage with their monthly rental payments. When it comes to taxes, paying back a debt is not considered income. So the monthly rental income that these investors create by having tenants in their properties, those investors are not actually taxed on that monthly rental income as long as that income is going towards paying off the mortgage. Any income that this property generates additionally besides what's paying off the mortgage will be taxed. But let's say you're an investor and you don't want to have any tenants in your property and you're just going to live in it. Now here is the kicker, guys. If you get anything out of this video, listen to this right now. Paying back a debt at 3, 4, or even 5% interest is still cheaper than paying 25% in taxes. So if you save up some money, put a down payment on a home, and get a mortgage, you're going to have to pay that mortgage back every single month with an interest rate of anywhere from 2.5% to 5%. That interest rate is going directly to whoever lent you that money, whether it was a bank or a private lender or whoever. But like I said, that 5% that you're paying every single month is still way less than paying 25% in taxes. So that's a short synopsis of how real estate investors save money by not paying as much in taxes because they're paying off debts. Most of the time, they're not even paying off the debts. They have a tenant who is paying off the debt for them. That's just one way of making passive income as a real estate investor. But also take this into consideration because real estate investing can actually provide 3 sources of income. The first source of income we've already talked about, that's the monthly rental income that comes from the tenants. That's the first form of income that you can generate as a real estate investor. The second form of income is the appreciating value of your home over time. Think about it this way. Currently, the world population on planet Earth is 7.5 billion people. 50 years ago, the world population was 3.5 billion people. So the population has doubled in the past 50 years. Every single person on planet Earth needs a roof over their heads to protect them from the elements, whether that's a hot sun, whether that's a snowstorm, a rainstorm, if it's super windy, if it's super cold, everybody needs a roof over their heads. And with the global population rising, that's less space on the earth for us all to fit. So over time, real estate values increase partially because of the growing world population. There's a lot of other factors and not all areas of real estate are appreciating. So appreciation is the second form of income that you can make as a real estate investor. The third form of income that you can create for yourself as a real estate investor is income from saving money on taxes. Like I said earlier, if you're paying off a debt for 5% interest, that's still way better than paying 25% of your paycheck in taxes as a small business owner or for working for a large company. Taxes, finance, and real estate may not be the most interesting topic for a lot of people, but it's such an excellent way to grow your wealth and pay less in taxes. If you've watched any of my other videos, you probably know that my wife Becca and I have a duplex and we rent the bottom half of it to tenants so that we can eliminate our housing expense because because the monthly rental income that we receive from the tenants pays for our mortgage. And honestly, it doesn't matter what our interest rate is on our mortgage loan because the tenants are paying for it. I'm no tax expert, I'm not a certified financial advisor, so just know that I'm providing this information for you to do a little bit more research into, and it may not be correct at the time that you're watching this video, but hopefully this can be an introductory video to open your mind of the possibilities of saving money in taxes and creating passive income for yourself. Hopefully by watching my channel and doing your own research, you can learn how to think about money differently. Most of us grow up surrounded by people who tell us to go to school, get good grades, and get a good job. Well, if you're like me and you have a difficult time in the job market, you might be better off starting your own business. Starting my own business was one of the best things that I've done in my life to allow myself the amount of personal freedom that I desire. And also owning my own business doesn't give me a limit of how much I can make if I want to work a little bit harder for it. It's not glamorous, it's a ton of work up front, but once you have something going, even if it's just a side hustle, I have a feeling that you'll realize that it is completely and 100% worth it. That's it for now. Don't forget to hit the like button if you haven't already, and subscribe to my channel for some more finance and Hawaii adventure content. Thank you so much for watching this. I really appreciate your support. Don't forget to grab your free stocks using the links in the description for Robinhood and WeBull investment apps. Whether you're an experienced investor or you're interested in learning a little bit more about the stock market, these are two incredible apps that offer free trading, and it's free to sign up as well. When you create your free account, you'll receive a free stock from both Robinhood and WeBull. If you're interested in getting a third free stock, fund your WeBull account $100. You're gonna need to fund these accounts anyways if you want to trade in the stock market. This third free stock from WeBull can be worth up to $1,400, so go get your free stocks using the links in the description below. Have a great day, guys. Thanks again for watching. I'm Joey. I'll talk to you soon.